Hey, and welcome to the Stockscores Market Minutes for September 28th, 2015. This week I want to talk about trading the right market. Traders tend to focus on their strategy and change strategies when something isn't working. So if they go through a losing streak, then they'll say, well, something's wrong with my strategy, I need to change the rules. And it becomes a bit of a vicious circle because they're constantly having to change their strategy as market conditions change. I would say, however, that it's often not the fault of the strategy, but rather the market that the trader is focused on. The strategy really doesn't have to change. Not to say that you can't modify your strategy over time, but oftentimes what you need to do is just focus the strategy in on the market that is moving, the market that is in play, because that is where your rules probably will work the best. When there's the crowd going to a particular area, you're often going to get better follow through and more price volatility. If you're using good basic trading strategy, just apply it to the hot market and you'll find that you'll be more effective than by modifying the rules of your strategy. All right, so this week was a fairly tumultuous one. We had a move down through most of the week, rebounded Thursday afternoon, tried to hold some gains on Friday, but kind of feebled out at the end of the day there. You can see on this chart, the 30-day, 60-minute chart, how the upward trend line was broken. We then pulled back for a few days. Volatility was pretty strong, had some pretty big moves this week. Friday the market opens up, but really sells off into the close. So although that short-term downward trend line was broken, that's the lower red line on your chart, the upper one is now the new downward trend line because we basically established a falling top on Friday from the highs of a week and a half ago or so. So I think this chart points to probably lower prices ahead. The buyers tried to rebound Thursday afternoon. They carried that into Friday morning and they failed, I would say, into the end of the day on Friday. So I'm a little concerned about the short-term direction being down. The longer-term chart of the S&P shows a breakdown on the weekly chart. So we had the break of the upward trend line a couple months ago. And then we rallied with a little bit of a flag pattern here. This is sort of this upward move that established a falling top. I've talked about that many times. Break the upward trend line, form a falling top, and now we're getting the breakdown from a falling top. It's not at the lows of the week. You can see the candle is not a full candle. It's got a bit of a tail there, so that's a little bit of a saving grace. But it looks to me like this market is more likely to move lower than higher, and that could threaten the very long upward trend line. If I was to draw a 5-year upward trend line, it would be cutting just through here, and we may break down through that in the next couple of weeks. So we want to be pretty cautious with stocks in the near term. Russell 2000 rose up to its downward trend line, got stuck, rolled over, moved down. Looks to me like we're going to test the green line of support. So again, a bearish chart setup. On the TSX, we also had weakness, broke through some support on the short-term chart and are now showing falling tops where we had kind of been trying to stabilize. I had upped my rating to neutral for the last week or two, but I think we got to go back to bearish because we have started to roll over and set up those falling tops. Here's the longer term chart of the TSX, and you can see that again we had established some support right in here around 20 on the T.XIU, broke down through that this week. I think we could retest those lows of August, which is basically the green line, or perhaps even the low at 18.5. So again, have caution going into next week and the next couple of weeks. TSX Venture was trying to build a rising bottom, really could still be building a rising bottom, but right now pessimism building in the very short term. You can see the falling tops that have been building over the last month, and we're testing support at this green line. We break down through that. We probably test the lows of August, and not necessarily a bad thing. It takes time for a market to bottom. At least we're trying, but I still think you got to be pretty cautious with this group as well. Treasuries broke the downward trend line, rallied, then kind of retested that trend line on the upper side of it, and trying to rally a little bit last week. Didn't really have much success there. I think this is a little bit of a tough market to call. I would sort of put a neutral but really uncertain rating on this chart. This is Treasury bonds. So if we start to move higher here, if we start to move up here, then that means prices are going to go down. I think one of the problems that we're seeing in the world is that emerging markets are really suffering. Europe is suffering. And it may be that even though the expectation is that U.S. interest rates are likely to go higher, at least from the Fed's perspective. If they raise rates in the U.S., that could mean that it really hurts the rest of the world more, and that will mean that money flows out of those countries and into the U.S., which would actually boost the price of stocks, boost the price of bonds. And even if the U.S. Federal Reserve is raising rates, it might actually make treasuries and corporate bonds in the U.S. go up just because of supply and demand. People are going to demand those instruments more because they're deemed to be safe or safer than Europe, safer than emerging markets. And we could have an interesting situation where the bond market goes up even in a rising interest rate environment from the Fed's perspective. Of course, bond market goes up, that means interest rates are actually going down. Here's the U.S. dollar in a pennant pattern at the top of a upward trend. If we break up through that red line, that will mean the U.S. dollar is likely to go higher. It's starting to look like that could happen. And again, if there's problem in the world, then the world wants to own the safest assets there are. And even though the U.S. is hardly, I would say, a riskless investment, it is the safest out there right now. And we could see money flowing into the U.S. if we see more turmoil around the world. So that U.S. dollar chart is one to watch. Gold is testing that downward trend line, at least the shortest one that we have here. And, you know, if there's some turmoil in the world, we could see a little bit of a rally in gold. I don't think gold is something that you want to rush out and buy, but I like it better than I did 2 months ago, I have to say, because it is building a little bit of a rising bottom. It is threatening that downward trend line, and it could try to make a little turn. I think you got to consider gold as just a very short-term trade. You can buy those gold miner stocks when gold is going up and be in and out within a week or two and actually do pretty well on them. But longer term, the perspective is still relatively ugly. The oil market trying to stabilize, building a rising bottom, broke the downward trend line, or at least the steepest of the downward trend lines late in August. And if we break up through the red line on this chart, on this little flag pattern here, that could be a break higher from a rising bottom, something positive. Don't see that yet, but it's trying to stabilize, trying to neutralize, and I think that it's got some potential, but big picture, we have to call this still a bearish chart. Volatility took a spike higher last week. This is a chart of volatility, and I traded volatility quite a bit last week through the VXX. You can do it through other ETFs, or I guess they're ETNs, like the UVXY, the TVIX, the XIV is the inverse of the VXX. There's lots of them, but they're very liquid, particularly the VXX, and you can take big positions, move in and out relatively quickly, and they have lots of good follow-through. So this is something that I'm trading a lot right now, and I recommend if we see market turmoil, like I think we could next week or in the next 2 weeks, that you take a look at the VXX as a way to profit from it. So my ratings then, I've lowered my ratings on US and Canadian stocks back to bearish on both time frames. Long-term bearish on gold, neutral short-term, it is trying to stabilize. Same thing with oil, bearish long-term, neutral short-term. After trying to bottom, US stocks have rolled over from a bear flag and volatility has started to move up. So I want you to be cautious with stock ownership, but bullish on volatility. That's the place, that's the right market to trade. Adapt your strategies to trading volatility. I think you'll do pretty well in the next little while. Oil's trying to bottom, gold trying to break its downward trend, but both may have to fight a stronger US dollar, which is threatening a breakout from that pennant pattern. Trade short term or sit in cash if you don't have the stomach for the volatility. Well, that has been the Stockscores Market Minutes for September 28th, 2015. Have a great week in the market and trade well.